Hello to all our friends out there in the financial advisor group community. We wanted to put a little video together today, not to talk about markets, not to talk about what's going on in the world, but more something that we always talk about when markets get a little crazy, that sometimes it creates opportunities. And one of the opportunities we talk about is something called tax loss harvesting. And I know that can sound like big words, but the bottom line is there's when markets have some dips, which they do from time to time, or fall, it gives us the ability in some accounts to make some moves to help save taxes. And who doesn't like saving taxes? A couple things before we just dive into it quickly is that this only pertains to investment accounts that are not IRAs, 401ks, basically retirement accounts. It's only for non-retirement investment accounts where taxes are an issue as you accumulate assets. So what tax loss harvesting says is there's the ability that when you have a loss in an investment on paper, you have the ability to sell that position, lock in the loss, move to a similar position. So you're not out, and this is a key component. We're not getting out of the market for any specific time. We're going to move in and out on the same day because we don't want to miss the upside if the market rallies from here. But we can sell out of ABC fund, lock in, let's say, $5,000 tax loss, and buy XYZ fund on the same day that both do the same thing. Therefore, we still own the same thing, but now we have a $5,000 loss to offset any potential capital gains later that year, or even some other income potentially. Now, there's some limitations on how much other income, but capital gain income, we can offset as much as we can. So when opportunities like this present themselves, we will go into accounts that have temporary tax losses on paper in them and purposely lock them in. Again, that goes to tax loss harvesting. You then have the ability on your tax return to help offset any capital gains for that year that come in and even help off some potential other income. This is a very important part of what we do. It's something we do actively. It's something we're always keeping an eye out for. Not that we like down markets, but it gives us something that we're excited about when markets do fall that we can take advantage of. So just wanted to give a brief sort of run over. This is something we do. It's nothing you have to call in and sort of ask us to do for you. We're always looking for these opportunities. And again, just a brief summary, it allows us to lock in a tax loss without getting out of the market. So we keep the exposure to the market, but help offset some of the tax down the line that could come from capital gains or other income. So just wanted to give you an example of something we see as an opportunity when markets get like this. And it's something we do proactively on our side to add value. And it continues. The investments are only part of this thing, right? In the planning process, taxes are vitally important. And when we get the opportunity to minimize how much you guys have to give to Uncle Sam, we're on board. Thanks again. We hope you enjoyed this little educational video. We'll try to keep more coming. Any questions or concerns, let us know. Thank you for the trust and confidence. And as always, make it a great day.